The gains public sector unit stocks have witnessed over the last 1 year has been little short of mind-boggling. Mangalore refineries shot up 345% in 2023-24. Ercon, Indian Railways Construction International, jumped 300%. Satluj Jal Vidyut Nigam, 265%. Indian Telephone Industries, 211%, being close to insanity some may reckon. Gujarat Mineral Development Corporation rose 190%. Kudremut Iron Ore Company, 155%. Metals and Mineral Trading Corporation, 145%. HAL, being much in the news of late, has gained 130%. All the three big names in the retail oil pack posted returns of close to 140% over the last 1 year. Mishra Dhatu Nigam Limited, engaged in the production of alloys and superconducting materials, rose 107%, and of course, the big daddy, ONGC, registered gains to the tune of 78%. In the PSU banking space, even an underperformer like SBI has posted yearly earnings of 43%, and Bank of Baroda, despite being wrought with internal issues, has posted gains of close to 65% in the last 1 year. So what happened in the last week or so? A sell-off that erased about $57 billion or close to 4.5 trillion rupees in market value. A minor blip considering the stupendous gains the pack had posted over the last 1 year, but sudden all the same. What were the reasons? One, stock performances. These are functions of two factors: earnings growth and potential to grow in the future. The markets have been factoring in the potential to grow in the future, but did the order books of these companies that they have landed actually translate on the ground? Let's look at some. The stock of Satluj Jal Vidyut Nigam hit the lower circuit on Monday after its third quarter profits and revenues missed the street estimates. Analysts had expected the company to post a net profit of 282 crores for the quarter. However, the net profit for the quarter came in at 139 crores, which was 52% lower year on year. Shares of SJVN had rallied more than fourfold in the year gone by, compared to 18% gain clocked by the benchmark Sensex during the same period. EBITDA of ONGC came in at 17,136 crores in the third quarter of the fiscal, as against an expectation from analysts of 17,575 crores. The refinery major also reported a 3% drop in crude production. Other PSUs which reported a fall in EBITDA included Gujarat Mineral Development Corporation, down 64%, and Mishra Dhatu Nigam Limited. The operating profits of Mishra Dhatu Nigam Limited fell 45% in Q3 2024, leading to a margin fall of 1,400 basis points on the year-on-year basis. 2. The expected disinvestment drive post-elections could have resulted in market sentiments towards a partial cash-out amongst investors. Almost all of the 75 PSUs in India have less than 10% of their stock floating in the open markets. The markets can expect a slew of offer for sale products from public sector undertakings in the next year or so. They'll have to wait a little longer for the most coveted one, LIC, which has been given a 10-year period towards divestment. 3. The RSI, or the Relative Strength Index. The PSU index's Relative Strength Index, a gauge of price momentum. It is a momentum indicator used to identify overbought or oversold conditions in the stock. The time period generally considered is 14 days. RSI readings below 25 are interpreted as oversold. At 71, the BSE PSU RSI reading currently rests at the highest level it has been in more than 2 decades. What's more, it has been above the 55 mark since November, the overbought zone, indicating investor confidence in the space on the one hand. But that leaves the gauge ripe for the kind of sell-off that erased, as I said earlier, about $57 billion or close to 4.7 trillion rupees in market value earlier this week. The last few days have witnessed some recovery, but the current trajectory is still mostly flattish, a pre-election shake-up or just another regular correction. We'll be watching this pack closely over the next few months.